CPI, the gauge of inflation, rose 4.3% last month. That was right around expectations. Joe Tigay of Equity Armor Investments is watching the market reaction. Joe.
That is interesting, and thank you for having me, Angie. Yeah, we got the CPI, it's out. Now the market's quickly focusing on the next thing. After the PPI, we'll be looking at the Fed meeting. So yeah, the market's always looking towards the next thing. And after that CPI number for me, I was watching yields, and they found resistance critically in the 2-year at 5.1%, in the 10-year at 4.3%. Yields wanted for a heartbeat to break out to new highs. However, people came in and bought treasuries at those levels. Those are attractive levels for some people to come in and get that risk-free yield. So that's what I was watching yesterday. Watching these treasuries hold in there. People coming in and buying these treasuries at these high yields.
What will this mean for the Fed's next meeting? Will there be a rate hike, or will the Fed stand pat?
No change after the CPI number, maybe some slight optimism that there'll be nothing going on in September. But again, the market's still with the Fed, the higher for longer narrative. However, we're not breaking out into the Fed's going to have 2 more hikes territory, or we're going to be not cutting until 2025 territory. The market's still pricing in some cuts in 2024, and the market's still betting that, yes, the Fed is saying they're going to stay higher for longer, but the market's saying, hey, at some point you're going to come in. Inflation is trending in the right direction. Treasuries are showing that there is some support at these high yields. The yields want to go lower. It's just on the path of least resistance for me.
Thanks, Joe.
Thanks.
Go to businessfirstam.com for where to see our show on TV.